everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, make sure you keep in mind that there's risk involved with each trade that you take. Obviously, there's no guarantee that any one trade is going to profit. So in one way or another, it makes sense to manage your risk at levels that you're comfortable with. And there are tools built into our web trader and our app that if we simulate some trades today, you'll be able to see how it makes the risk management side of things quite a bit easier to calculate exposure, potential profit, etc. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader platform, which allows you to trade on both MT4 and MT5 accounts, but with the advanced functionalities that we offer in terms of technical and fundamental analysis, as well as the free signals that come into our platform and app. You can get our app in the major app stores, or there are links for our app from our website here. And again, the same functionalities that we'll see in the web trader are available from within the app. Now, if we log in the upper right corner of the main website, we'll be in the web trader platform. And now our focus today is fundamental analysis. We'll obviously take a look still at the technical setup of the charts that we analyze, so that we can look at maybe opportunistic entry points and exit points from a technical perspective. But I think the overall driving force in terms of directionality with today's session will be the fundamental news, to see what direction the fundamentals maybe make you believe the movements should go. And then you use the technical analysis to kind of zoom in on where you prefer to enter and exit trades. So we've got some different tools available in the platform and in our app that we could make use of. Common ones I use somewhat repetitively because of the ease at which that you can use the tools, and also the power of the information that they give. And so I think a good place to start today is the economic calendar, because there are some major announcements coming out of the US that really are the large focus of the day. It's inflationary data, CPI numbers coming out of the US, and it really has huge implications as to whether the US will see fit to continue cutting interest rates this year, at what size they might cut interest rates still this year, whether it'll be 0.25% or another 0.5% rate cut. And it's really data dependent. Jerome Powell and the FOMC committee keep saying that they're looking to lower rates, but it's data dependent. Depends on how is inflation doing, how are the economic numbers looking. Now, yesterday there was some data that was stronger than expected out of the US, which leads people to believe that maybe they can't cut rates as fast as maybe some were hoping. Because if the economy is already doing strong, if you cut interest rates too fast, that could bring inflation right back. And the whole point of raising interest rates over the past year and a half, before the first lowering that occurred recently, the higher interest rates were meant to bring down inflation. And so inflation really hasn't gotten to the target yet, hasn't gotten lowered as much as would be liked. But because the jobs numbers and the business climate was being negatively affected in the US from the high interest rates, they did that 0.5% cut with hopes that they can help out the job situation from getting any worse and help the businesses out with lower rates. But fingers crossed that inflation doesn't come roaring back. So this data today, after that 0.5% cut, there's a hyper focus on the CPI data to see where is the inflationary situation, what is the inflationary situation, and where are those numbers. So if we go to the economic calendar, what we can do is focus on specific announcements and analyze with our economic calendar, with the advanced tools that are available on our calendar, analyze how have the movements moved in the recent announcements for the same announcements based on how the numbers come in. And so first we need to pick the right date. So today's the 10th. So the way this calendar works, you can pick the date range that you want. You can pick the countries that you're interested in seeing the announcements for, and the level of the announcements that you wish to see, low, medium, high. The higher level announcements tend to move the charts more. The lower end, not so much. And so we're looking at the medium and high level announcements that are coming in, which tend to have more of an effect on the currency price movements for the related countries. So a number of announcements already came in today. We'll focus on those that have not occurred yet, and that happens to be out of the US. And what we see is many times you have multiple announcements at once, and you need to figure out which one tends to be driving the movement the most if there are multiple announcements at once. And sometimes they have kind of an equal effect or an additive effect. So if we're focusing on the US, we see all of this information except for one of the numbers really is inflationary related. We do have initial jobless claims that are coming out at the same time as all of this inflationary data, core inflation rate, overall inflation rate, that's month over month and also year over year, inflation rate and core inflation rate year over year and month over month, and then jobless claims coming out as well. So like I said, I think the focus is less on the jobless claims right now and more on the inflationary data. And if we look, month over month tends to have been the stronger focus because we understand year over year there's a difference. We already know that. The question is, how is it changing now month to month? Is it getting better or getting worse? And so a lot of times the month over month data tends to have more of a focus. And so if we look at that initial inflation rate, or not initial, but inflation rate month over month, we can use the volatility tool over here to analyze the past announcements with different currency pairings and time frames and under different results. Did it come in above forecast, below forecast, or matching forecast? So if we look at any USD pairing, I'll leave it on Euro USD, for different time frames, as little as 5 minutes after each announcement, up to 4 hours. We'll leave it on 4 hours for now, and then we can qualify it. It doesn't mean much to me if I'm just saying all events, but if I then say, if this comes in above forecast, meaning inflation is higher than expected, what might happen to the Euro USD pairing? Okay, above forecast 100% of the time over the past year, the USD pulled down the Euro. Okay, that's pretty strong data there. 4 out of 4 times. It's not like it only happened once. 4 out of 4 times, we have an average range movement of over 81 pips. Okay, the largest drop here was 132 pips or so. USD rapidly strengthened over those 4 hours with over 81 pip average range movement. Directionality, all of them down after 4 hours. If the USD's inflation rate month over month came in higher than expected. What if it came in below forecast? 100% of the time up. The USD weakened against the Euro when it came in below forecast. So this is pretty convincing data that there's a reaction here to this, the results of the inflation rate month over month coming in. Okay, so, and this is over the course of 4 hours, over 91 pips, almost 100 pips range movement. I mean, look at this climb, 135 pips, 74 pips, and the smallest move was about 20 pips up, okay? And that's after 4 hours. If you, within the first 5 minutes, place a trade, okay, the movement average range is only 53 pips. So you still had another 40 pip range movement to go after the first 5 minutes. So it's not like you don't have time to place the trade, and it shouldn't even take you 5 minutes to place a trade, right? So you could even get in sooner than that. And the same in the other direction. If this was above forecast, after 4 hours, over 81 pip average range movement, 100% of the time, the USD strengthened and pulled the Euro down when it came in above forecast. And in the first 5 minutes, we're talking only about 30 pips range movement. So you still had time to get the trades off in the first 5 minutes, with most of the range movement not having occurred yet. And after 4 hours, over 81 pips average range movement. Now you could be selective with your entry points. If it comes in a certain way that you feel the data says the movement should go up or down based on the past statistics, now it's not going to work every time, but you can be patient for your entry point. If it already spiked, in this case, if it came in above forecast, if it already spiked down 40 pips before you could get your trade off, then maybe you say, okay, I'll wait. Maybe it spikes back up and you get a better entry point to go in the direction that you believe it should be after 4 hours, okay? Or after 1 hour, depending on which data you want to look at. But you see, after 1 hour, it was 70 pips. After 4 hours, it was 81 pips, okay? The shorter the time frame, typically, it's moved less. 30 minutes, 61 pips. An hour, 70 pips. 4 hours, 81 pips, okay? So you have time, if you see an entry point you like, to trade in the direction that you feel the statistics tell you you should trade, okay? And so this is a really powerful tool to be able to use to rather than trade on emotions, to be able to trade on what's called data-driven trading, okay? Like a robot, somewhat, you have analyzed the data and you're going to trade in the direction that the data says maybe you should trade. This is one example of a fundamental trading strategy that you can use, okay? And you can, on Saturday or Sunday for the upcoming week, find the announcements for each day of the week that have the best statistics that you like the best, and then you have it written down in your trading schedule for that week, which announcements, at what time you're gonna pay attention to, and what direction you'll trade based on how the numbers come in, okay? And you can try that strategy out, and these announcements are repetitive. They come in each week, each month, again and again and again, and then you can see after 6 months of doing this, which announcements do you have the best return on? Which ones are you able to read the statistics the best and time the trades and have the best success with? And then you can, moving forward, focus on the ones you're most successful on the most, okay? And don't judge it after one try, okay? You might lose the first time you try it, but win the next 3 times. So you want to get a good set of statistics to say, okay, I've tried each of these big announcements through the months 5 or 10 times each, and let's see which ones I had the best success with. Okay, so this is one really strong idea for a trading strategy based on fundamental news, which are economic announcements with actual numbers that come out, that really takes the emotion out of trading. To be able to see how far you expect it to move, in what direction, how far would you put your take profit, how far back your stop loss, based on the range movements that these statistics show you from the past when these announcements came in, okay? And we could go on, we could look at announcements tomorrow, next week, etc. Same process though. Now, we have other tools that are fundamental based. We have a news feed, okay? Click on news here. It summarizes the news and tells you instruments that you might want to trade on that would maybe be affected by the news that was summarized here. And it summarizes the economic calendar, data that came out, news articles, pretty much all of the fundamental news that it can find. It's summarized here and relates it to certain instruments that you might want to buy or sell on based on that news. So if you don't have time to look at the economic calendar and time the trades like we just said in a live sense, you can do after the fact, reading the news feed to quickly brief yourself on the information, and after the fact, decide whether you want to trade on a specific instrument based on the newsfeed summaries. So that's another option for you. A third option we can look at would be the Market Buzz feature. This is a really nice tool because it combines some technical analysis help with the fundamental news. And so we could pick something that's trending more or less. The smaller circles are trending less. The bigger ones are trending more. Okay, I heard some buzz about Tesla, so maybe I'll check it out. It's at over 300 mentions that we found online recently. And so we can take a look, first of all, what's the technical prediction? The trend analysis says it might rise 21% or more. We can take a look at the technical setup. It shows the support levels below, the take profit marks that the signal thinks it will reach, and those take profit marks are based on the next resistance levels from the past. So it might have trouble breaking past this zone because in the past when it reached this area, it came back down. And so it's looking at a nice support level here, and an uptrend may be expected on Tesla. That's from a technical perspective. Now we can read the fundamentals and see, does the fundamental news support that as well? And there's articles that came out just today, yesterday. This is pretty convincing news. Tesla's China-made electric vehicle sales grow over 19% in September. They sold over 72,000 vehicles in China. Wow, that's pretty big news. That sounds like news that could almost help a technical signal like this. Okay, so you can quickly find information. I can click on the link, I can read a summary, or I can read the entire article if I wish. Business Standard is the source. Here's the whole article. You can read all about the sales in China of Tesla electric vehicles. And so you can make up your own mind based on the most recent news. Do I think Tesla will go up or not? From a fundamental perspective, feels like maybe the wind is at Tesla's back to go up. The fundamental headwinds are maybe in the direction to help it rise. And then you combine that with the technical signal that shows a nice support level and free open space before it hits the next resistance level up here. You combine those two things together, maybe that's enough to make it so when the US market opens today, you check the entry point. Maybe the CPI data comes in higher than expected and pulls Tesla down, and you get a nice price you like to go with the bigger picture that was positive news with Tesla. Okay, so you start to combine the fact that there's big data coming out that could move Tesla one way or another short term, CPI data today. You hope that maybe gives you a nice entry point to go with the positive news on Tesla and the technical signal on Tesla. And so maybe all of those things can come together today when the US market opens. Okay, now if the CPI data comes in lower than expected, that's even better for the stocks perhaps, because the stocks will cheer the fact that, hey, inflation is dropping and perhaps interest rates can be lowered in a strong sense again in the US, and that actually could help the rise of the stocks in the US in particular. So watch the CPI data. That can give you a feel for what you might wait for at the open. Higher than expected CPI, maybe you wait for a pullback on Tesla. Better than expected, or I should say lower than expected CPI data, maybe makes it so even if it's uptrending at the open, you don't wait for a pullback on Tesla. So you can read the CPI data to determine whether you get in even on a surge up, or maybe you wait for a pullback. But either way, maybe this data here, the article and the signal helps convince you that maybe you want to buy on Tesla, but the CPI data will determine at what price level you'd want to get in. So you start to put these tools together to have a trading strategy rather than just blindly follow a signal. Okay? Any questions, comments on that or the economic calendar that we looked at before I move forward, maybe to look at a chart? Okay, I don't see any questions coming up, so I'll assume I've been clear. If I do see questions come up as I'm going along, I'll address them as I see them. So, yesterday we did some trade simulations in my evening webinar, and we just took a few. They came out quite good. We basically did the same thing we're doing now, only we spent a little more time on the technical analysis and the signals, and then just did a quick overview for what was the sentiment from the fundamental news. And we felt like we had a good idea of what the sentiment would do. There was some fear starting to creep back into the markets with the Middle East situation, which we thought might bounce crude oil up, which it did. And the technical setup was nice for crude oil with a support level below in the one-day candles. So that was a pretty easy decision. USD strengthening with fear kind of made sense, and the better than expected economic data yesterday that came out of the US kind of made us feel like the USD could strengthen and pull the euro down. So that worked out. So you can see as I go through these, they are each fundamentally driven, but our entry points were based on technical analysis. Okay, and we did look at the signals as well, and we chose signals only in the direction that the fundamental news made sense. Okay, and these worked out okay. And I believe the US 500 was at one point in a better profit. I just closed them off before the webinar so we could start fresh on fresh looks. But I just want to demonstrate the power of getting a good technical entry point and trying to be in the direction of the momentum from the fundamental news, okay? Now, we started today with the fundamental news look, and we went a little deeper with the economic announcement and the calendar tools. So that's something you would wait until the announcement comes out, the first strategy we looked at on the economic calendar. But we also could act at any time based on the current sentiment of how you feel things are. Now, it'd be interesting to look at crude oil again. Again, with the Middle East situation, we're looking at some fear going on, and this was a sell signal that we went against yesterday because of the fundamental news. The fundamental news was fear in the Middle East, and we thought that might bump the price up, which it did, and it's good that we did that because this sell signal just failed. Okay, you see the market has already reached a key level. It went up and broke above the pivot line. So stop losses on the sell signal would have been above this pivot. You may have already hit your stop loss if you were selling on that signal yesterday. Why did we avoid that signal yesterday? Because we're not blindly following signals. We're also taking into account the fundamental news and picking and choosing the signals that make the most sense. The technicals are outlined in the signals very nicely. Support and resistance levels, they're all drawn here. But directionality, sometimes you need to look at the fundamentals to decide whether that signal is still valid in your mind. And so we correctly avoided the sell signal and went with a buy. And now this looks like, since it broke the pivot line, it's got upward momentum. So it feels like maybe this is more of a buy than a sell from a technical perspective because it broke the resistance level. And so let's see if we can get the crude oil chart to load for us. We'll load it from up here. Let's try it again. I think my internet's just a little fussy. Let me refresh my screen. We'll get the crude oil chart up. There it is. Yeah, I just needed to refresh on my side. Okay, so the crude oil chart is showing, like yesterday, this support level on the one-day candles. These are one-day candles. This was yesterday. We were bouncing off this support level down here, which in the past it was support at this price once. It hit again and bounced off that price twice. And then once it broke below that price, that became resistance. Okay, so yesterday this was coming down to that same price level. So from a technical perspective, when it bounced up off there, that's where we were buying. Okay, and up it came just as we felt like it might, with the fear of potential supply disruptions if things worsen in the Middle East with the war situation. And so now we're sitting kind of in the middle from an opportunistic standpoint. From a technical perspective, it doesn't feel as opportunistic anymore because we're almost halfway between the support level and the resistance level. So it feels like I have to risk just as much as my potential profit will be. We actually have a little better potential profit distance to the resistance, little less risk to the support level, but it's almost equal. And so I'm not in a hurry to rush into this for a couple reasons. One is it's not as opportunistic of an entry point, technically speaking, but also that CPI data is coming, and that's an unknown. We don't know if the CPI data will come in lower than expected, okay, or higher than expected. And that's going to play with the strength of the USD and also the fear of whether there's going to be demand for crude oil or not. So I feel like this is a situation where if this does pull down, I'm interested because of the Middle East war situation to buy from closer to this support level with the fears of supply disruptions if it does pull back. And to to make a move now before the CPI data comes out, I feel a bit more risk than I would want to take without knowing what that CPI data is yet. So I feel like on this one, when it was down here yesterday, that was a successful trade to go with trusting the support level from a technical perspective and that the fundamentals were somewhat on our side. But now I feel like the same move makes sense, but maybe from a pending order just above the support level if indeed this pulls back with the CPI data. So if the CPI data comes in showing a slowdown, maybe economically, maybe crude oil pulls down with fears of an economic slowdown. Less demand maybe would be the fear if CPI data comes in too low. But whatever the case may be, if crude oil can pull back towards this technical support level, I think the longer term fundamental news is there's probably going to be escalatory events in the Middle East with the war situation, which could cause crude oil to spike. But maybe we can get a pullback and have a better price level before that happens. So I'm looking around 72, maybe 72.50 to be a spot that I'd be more comfortable trying to get in, closer to the support level. And so if I'm going to buy on this, I feel like it could go up. And even from the current price, honestly, I feel like it could go up. But I'm going to be a little more cautious since it's already risen so much and say if it pulls back, then I'll execute this buy position if the price hits 72.50. Now, this strategy, obviously, you can make it your own. You could say you want to buy now, okay? If you feel like the fear situation about the war will drive the price up and you think it'll just keep climbing, then by all means, you don't need to do a pending order. And it's okay to have maybe equal risk to your stop loss and compared to your potential profit, to your take profit. That's okay too. There's nothing wrong with that. But I'm giving you a strategy idea that the CPI data is coming. I'm hoping for a better price entry point for the direction I believe it will go in the coming week or so, something like that. So if it pulls back to 72.50, great. And by the way, you can do both. You can have a pending order to buy from a lower price and also do a market move, maybe with a smaller trade than usual from the less opportunistic price. Now, I keep talking about buying because that's what I feel the fundamental news is pointing towards. But if you feel the opposite, certainly you could be selling or putting a pending order up near the resistance to sell from if you want a better price to sell from. I'm just simulating a certain news story, Middle East tensions, with how some might view that to push the price, and then trying to combine that with technical analysis. So it's the process that I'm trying to show, not necessarily that you have to think exactly the same as what I'm demonstrating. So if you feel the Middle East tension would drive price up and you feel that that's inevitable in the coming days or weeks, but you'd like a better price point to enter and you feel the CPI data could disrupt the larger movement and maybe cause a temporary pullback, then this is a strategy you might use. Now, take profit, I'm looking the first major resistance level up here. So 78 point, maybe 2.5, just before that resistance up there. So take profit, 78.25. Okay, stop loss, if I enter here, would be below this wick. Taking advantage of this old support level, it would have to break below there for me to admit that it might keep dropping. So 71.25 for a stop loss. As an example, you could obviously have a little bit further below the support level. Maybe I go 71 even. Okay, would have to hit this line for me to decide that I'm out on the buy. So now I'm looking at potential profit over 37,000, risk less than a third of that. Okay, almost 25%. So almost 4-to-1 ratio here, approximately potential profit to risk. Now I don't want to risk 9,750 maybe with the balance I have. That would be over 10% of my account on one move. So I'm going to change the trade size. So maybe I'm looking at half a lot. Now I'm risking a little more than 1% of my balance to make a lot more than that. Okay, so 0.4 maybe. Now I'm risking almost exactly 1%, just a hair over, 600 to make 2,300. Almost 4 times as much potential profit compared to risk. Why is it such a good ratio, potential profit to risk? Because I'm doing a pending order. I'm waiting for a potential pullback that might not ever happen, right? Like I said, there's a lot of fear about the Middle East right now, and this move could just keep climbing. So this is one way to go after a trade, is to have a pending order that maybe you're hoping to get a better price. Now, that doesn't have to be your only trade. You also could say this is a strong uptrend, and maybe you say, I believe an escalation in the Middle East is inevitable, so you're also going to make another move that's a market move. And so maybe because it's a market move and my entry price isn't as nice, I need to do a smaller trade. So 0.25 with my stop loss down at 71, same stop loss, down below the support level. Okay, but now my take profit at the same spot, 78.25. Now you see it's 1-to-1 ratio almost. That's okay. There's nothing wrong with that. Now I do a trade size that risks the amount I want to risk. You see it has to be a smaller trade because my entry point is not as opportunistic. And I'm zeroing in on the trade size that risks the amount that I want to risk. I'm simulating about a 1% risk per trade. You could risk the percent you want. And so that's about 1% of my balance again. Potential profit, almost just 1-to-1, a little better potential profit than risk. So now I've diversified my risk management strategy on crude oil. The fundamental news, what's driving me is the fundamental news with the buy. My entry strategy, I've diversified. One is a market move with almost a 1-to-1 ratio, potential profit to risk. The other move is a pending order in the same direction, but taking into account that the CPI data is coming today. So maybe I can grab a better entry point as well with the second trade. Still in the direction that I believe the larger fundamental news in the coming days or weeks might move crude oil. And if I'm wrong on both of these, I've only risked 2% of my account on these two trades, okay? To try and make much more than that if the second trade kicks in, okay? So this is a sort of process you can use with the advanced tools we have in our order window to use technical analysis to find the price points that you want to get in and out in the direction of the fundamental news and understand from the tools in our order window exactly how much you're risking. So there's no surprise. You don't have to be nervous. I don't have to keep checking my trade over and over. I know what I'm risking on the trade. I know why I took the trade. I like my entry points and exit points that I've put on it. And now I can sit back and relax and not be stressed about any one trade. And now I can take a look at my other strategy when the CPI data comes out and trade in a whole different way, with also a limited amount of risk on each trade. And this is how, little by little, at the end of each day, each week, and each month, hopefully you've gained more 1 or 2 or 3% gains than you've lost those 1% risks, or depending on what percent you risk per trade, 0.5%, 2%. It doesn't have to be exactly the same as what my example is, but you should know how much you're risking and have that in control as much as you possibly can with each of your moves. All right, everybody, I think this is a good place to stop. We've gone through some ideas, some specific instruments. Any questions, comments before we end things? Okay, thank you for joining. My next session will be next week on Tuesday evening. That's 5 p.m. UK time. And we always focus in that session, I'm sorry, it'll be Wednesday evening, not Tuesday, Wednesday evening at 5 p.m. UK time. And we always focus a bit more in that session on the technicals, but we still mention the fundamental news, the big stories of the day to get a feel for the sentiment. All right, everybody, thank you for joining. Good luck with your trading. Bye for now.